Hi, everybody. Thank you, Marty, for inviting me today. I'm excited that we are now moving into the sexy part of today's programming, crypto. So I'm glad to be here. I am a physician entrepreneur, a fellowship-trained pediatric anesthesiologist, but an entrepreneur from a very young age, from an entrepreneurial family. I tend to spend a lot of time looking at riskier asset classes for investments, and crypto falls right into that wheelhouse. I am one of the co-owners of Crypto VCF. We are launching our first fund called Quantum. We are heading toward 100 million under management by the end of the year. And what we'll be doing, it is a fund-to-fund model, and we are going to be diversifying risk by investing in funds that are in the metaverse, in decentralized finance, in NFTs, in gamification, and also in blockchain development. So I study crypto. It's what I do 24/7, and the trends that we're seeing in crypto, and I'm really excited to talk about the future of what's happening with this asset class.
And that's really great. So I live with a doctor, and what I know, I can guarantee is that people, doctors are good students. So Eric, who are you in sunny Miami? Is that, I see a lot of sunshine in the background.
Yeah, that's where crypto is. I'm in Miami. So, yeah, I come out of traditional finance. I was a bond trader and then working in internet VC for about a decade. Discovered Bitcoin in 2013, bought my first Bitcoin in December 2013, and was planning to launch a crypto fund in the 2016 timeframe when I saw that there were about 400 crypto hedge funds already in existence. And I kind of looked at the other funds out there, tried to assess whether or not I thought I had any edge, came to the conclusion that not only did I not have any edge, but I would happily pay them their 2 and 20 for their edge, and went to go invest personally in a couple funds. They had very high minimums, different strategies. So in February 2018, I launched the first crypto fund of funds, and we've had a good run. Investors are now, even though we started at a very inauspicious time and we're down 50% at one point, investors are now up 11x net of fees. And also in the crypto space, some of you may have heard of Michael Saylor, has been pretty instrumental, especially in Bitcoin. He's a good buddy of mine, and I am the individual that got him into Bitcoin. So another fund of funds, which I can tell you is a good approach, by the way. So good luck on your new venture.
Mauro, so funny thing, we were in Switzerland back in 2015, and we were with a guy named Harry Yee, who was he's been a very famous crypto trader over the years, et cetera. Harry's famous because he used to come to our conferences and give away Bitcoin to people. He'd give like $25 in Bitcoin to everybody when it was worth about $100. So then when it went up in the last leg, he would say, hey, you know, I can't remember my key address, et cetera. So big problem. But we were in Zurich and we presented to a bunch of people in Zurich, a bunch of bankers, and I think Bitcoin was $700 at the time. And Harry's like, you guys should all put every penny you have in Bitcoin. It was pretty funny to watch the reaction. But we went to Zug, which is kind of in its infancy. Zug has always been a big commodities trading area. So more, I think you're like in the middle of Zurich and Zug, and sometimes you're in Lugano and other places, Italy. So talk about what you do. Talk about, you know, what crypto is doing in Switzerland. You know, I think it's very exciting what's been happening there. So.
Yeah. Okay. So my name is Mauro Andriotto. I'm a professor in finance in Italy and in Switzerland, where I'm teaching with UBIS Geneva. I'm an advisor of the European Commission for Technology and Innovation, and I'm an equity partner of SMC, that is a multifamily office based here in Switzerland that has 50 physical locations around the world in different countries. I am the founder of a platform that is named European Digital Asset Exchange. That is the first platform in Europe that has a primary and a secondary market of security tokens that is open to institutional and retail people. So I've started to work with crypto in 2016. Before I was the quantitative leader of Ernst & Young for the South Europe. Then, as I said, in 2016, I've started to work with crypto. I've been working with a lot of different ICOs, hundreds of ICOs from Japan to Las Vegas. And right now we are working on NFTs. We still have some ICOs, and above all, we are working in security tokens. As I said, we have this platform, and I've been here several times, but I would say that this time is the first time that I can say that I am seeing a traditional finance that is entering in the security token space. Right now we have three big projects. One is from a 3.4 billion French fund that is doing a pre-listing of a company that will be listed on the Frankfurt Stock Exchange. And this pre-listing is done with the tokens. So people that will buy the token are actually buying a discounted share. And I think that is very, very interesting because it shows that some big funds are thinking at entering in the blockchain, and they are starting to do some proof of concept with the blockchain and digitization of financial security. Then we have another very interesting project that is one of the biggest mining group in the Central Africa. It's a second just to Glencore, and they are based in Central Africa, and they have some of the biggest mines in Zambia. So they are digitizing a forward contract on copper. And then the third project, maybe it's even more interesting because from a certain way it's coming from US. It's actually is a European company, but they were listed on the Nasdaq Stock Exchange, and for some reasons they have been delisted, and now they have 5,000 investors that are looking for a secondary market. So they are thinking at digitizing the shares here in Switzerland through an holding company in order to give to their investor a secondary market where they can still have the possibility of exchanging the shares. So what I'm seeing is pretty lot of movements, interesting. And I mean, we are here and I'm happy to have done this choice for crypto, blockchain, and security tokens.
So maybe you guys can talk a little bit around, you know, so people, there's a lot of legs to crypto, right? So there's Bitcoin, and people follow that pricing, and Ethereum, and then there are these tokens and you know, many other things that are coming about, such as NFTs and metaverse. But you know, if you look at the different legs of this stool, can you talk about, you know, where Bitcoin is right now, and you know, what you anticipate happening with it, especially that there's a good amount of you know, global risk that seems to be happening, right? Or global volatility. You look at what happened in Canada, you look at what's going on in Ukraine. You know, historically, whenever there's any kind of global risk, like in Korea, et cetera, Bitcoin has gone up. So maybe you guys can talk around that a little bit, and we'll go to the next question after that. So, Eric?
Sure. So I think, I mean, obviously the context for this conversation is investment, right? And so I think it's important to think about how one wants to get exposure to this asset class. And I think that's the key term here, is to think about it as an asset class. Right now, you've got a $1.7 trillion asset class that includes Bitcoin, that includes the stable coins, that includes the scam coins, it includes what I would call liquid venture capital. It's everything, right? that is smaller than Microsoft, it's smaller than Apple, it's smaller than a large tech company. So I think the way to look at getting exposure to the asset class is rather than trying to pick winners, be they NFTs, decentralized finance, security tokens, whatever it may be, you need to invest in the asset class as a whole. So when I started the fund of funds in February 2018, no one was using the terms DeFi. No one were using the terms NFTs. No one were using these. And I think it's such an evolving asset class even today that if you were to pick a specific leg of that stool, so to speak, to invest in, you're potentially limiting yourself when really what I think folks want to be doing is invest in the asset class. And I think that's, not talking my book in any way, but I think that's why you want to be in a diversified portfolio of fund of funds or, some other vehicle or collection that you put together that either A, covers the entire asset class, or B, whoever you're investing with has a charter that allows them to take advantage of all these things. We've had the benefit of taking advantage of new evolutions that we didn't know existed when we launched. So it's worked out quite well for our investors. And I think that's essential. But to your point about the macroeconomic stuff, you can bet on Bitcoin. I think Bitcoin has a lead right now. A lot of people in the world who are living in first world countries, be it the US or Canada, might have thought that they didn't need to step outside the system or have a true bearer asset that was limited in supply that may truly protect them against inflation. And with what we've seen in Canada, I've heard a lot of people, really credible people, say, now I get it, Well, they didn't get it because they weren't in Venezuela or Turkey or some of these other, Lebanon, other places that experienced hyperinflation. But now that Canada is kind of taking a more authoritarian view on some things, people are going, oh, wow, this is not so far-fetched. Maybe this could be a thing. So I think Bitcoin has a lead. That said, I'd be more comfortable betting on the asset class 10xing going to 17 trillion than I would Bitcoin 10xing going to 400,000.
Keep it going. Yep. Mauro, any thoughts?
Well, I lost part of your initial question, but I think that I have understood. It's about macroeconomic that they might move
There's global
cryptocurrency.
volatility. Yep.
Yeah. So yes, well, actually, I'm a little bit surprised because what I see is Bitcoin and cryptocurrency that are behaving a little bit, maybe too much as stocks. They doesn't really seem until now to be very correlated with inflation and expectation of inflation. They seem it seems that the correlation is increasing with the one of the stock market. So this is from a certain point of view worrying me a little bit. Regarding this, I would say that it's true that they are limited, that Bitcoin is a limited and scarce resource, but we don't have to forget that scarcity without demand, I would say, is nothing. We also need the demand for being able to support the price and to have the price to increase. I really think that the level achieved by Bitcoin was pretty high. So don't forget that the market cap of let's say gold is around is a little bit more than 10 trillions of dollars, and the one achieved by Bitcoin is around 1.5. So I mean, at least we are on the same path, on the same let's say sites. Yeah, I would say that regarding volatility and macroeconomics, the other part that is worrying me a little bit is about what's happening in Ukraine and Russia. Let's remember that Kazakhstan right now is the country number 2 after US for mining, and Kazakhstan and Russia have a really strong understanding in this moment. So I think, I mean, there are some factors that, let's say, do not scare me, but they are worrying me a little bit.
Mauro, can I just cut in for 1 second? You know, it's very interesting. I was reading an analysis of all of these, actions that are being taken against Russia. But, you know, the reality is that Russia is a net exporter of oil. So they have all kinds of capital coming in. Their debt is a very small percent of GDP versus US or Japan or any other country. So they're really, you know, very slightly impacted. They are actually taking steps towards, you know, incorporating Bitcoin into their whole, you know, world philosophy. And any perspective on, you know, Russia and their attitude towards Bitcoin, which seems to be changing faster. I think they're, you know, moving towards it quicker. So thoughts, you and the rest of the panel? More?
Well, yeah, I think that, I mean, they might have good reasons for banning Bitcoin, but they might have also good reasons for keeping Bitcoin, above all if sanction will increase against them. Clearly, Bitcoin can be a mean of payment that is not controlled by banks, so I think it might be used against the sanctions. So it might be a good reason for Russia to keep it going. On the other side, I think there is a high level of uncertainty because, I mean, we don't know exactly what is going to happen. Baltics region is very worried at this point because they do not know what will happen when and if the Russian army will arrive in Kiev. Then it will be very close to the NATO army that would be just a couple of hundreds of kilometers from Kiev. So I think it seems also that China is, I mean, indirectly supporting Russia, at least is not against what is happening. So, I mean, it's something that we will see. I don't have clearly a clear answer for you.
No worries.
Yeah.
Elizabeth,
So,
do you have any perspective on Bitcoin? Sorry.
yeah, I was just gonna add to that. So I don't quite have, I don't think, the level of concern that Mauro has with respect to Bitcoin. I think that all of these geopolitical existential threats have always been temporary market shocks. So Bitcoin, let's talk a little bit about Bitcoin specifically, right? So Bitcoin suffers or benefits from trading 24/7, 365 in every currency in the world. So if you look over the last holiday weekend in the United States, when tensions were increasing, you know, with Russia and Ukraine, people want to be in a risk-off situation, right? So Bitcoin is up 150% on average for the last decade. It's the best performing asset or asset class you're going to find. So in a risk-off situation, people sell the only thing that's liquid, where you could sell billions of dollars of it, and there's a market there. So I think that's what you were seeing is, you know, kind of Bitcoin providing that service for the world, so to speak. And I think that's a sign of things to come, right? And part of what makes it, you know, kind of a superior asset with respect to different countries and how they're viewing it. Increasingly, what we're seeing are countries that embrace freedom, that are not authoritarian, that are not, you know, China's very afraid of capital flight. They've come out against Bitcoin. They've banned Bitcoin mining. They've banned commerce with it. The reason being, if people are able to convert their wealth into Bitcoin in China, that money could leave China, which is what they want to guard against. It's why they want a central bank digital currency in China, so that they have the ultimate control over that capital, so it could never leave. They could literally just delete it out of your wallet or freeze it or whatever they want. So in the United States, what we're seeing is quite the opposite. And I think this week we should get some guidance from the Biden administration on how they plan to, you know, regulate cryptocurrencies. But you've got Gary Gensler heading the SEC now, who for 3 years taught a course on Bitcoin and cryptocurrency at MIT Sloan. He could have taught a course on anything he wanted. And increasingly, you're seeing senators and congresspeople from both sides of the aisle supporting Bitcoin, supporting crypto in general. So I think it's very clear that the US plans to regulate these things in a pragmatic way, which is great for the entrance of institutional capital. That's what they want, is some comfort and AML KYC guidance. So I think that Bitcoin is in a remarkably good position. It's likely the only cryptocurrency that's going to be deemed property, which has tremendous advantages that we can get into if you like, but it gets kind of in the weeds. But being property has tremendous advantage over being a security for a whole host of reasons. And it appears Bitcoin is going to be treated as property, which is awesome. The other thing that's kind of related to this, but not specific, that I wanted to mention is, you know, about 20% of the global population has access to the US equity markets. 100% of the almost 8 billion people on the planet, if they have a smartphone, can hold cryptocurrency or digital assets. There's never been an asset or asset class that the entire world could own. And that's an incredibly powerful factor going forward.
Well, Eric, I mean, so just, and I hate to be historical here, but
yeah.
You know, the reality is that we did our conference and we had Bitcoin in 2015, and there was a Venezuelan family, as you talked about, Latin American families who experienced hyperinflation, and they bought every dollar they could, and they ran out of ability to buy dollars, so they bought like $1 million of Bitcoin at the time, which seemed to be, which is now a very good investment, right?
Very good, yeah.
Right. So what everybody else in the world experiences on a regular basis is these currency devaluations, you know, or currency, let's call it insecurity, right? Because strong men can take away your money anytime, right? Whether it's in Ukraine or Canada, you know, people.
Or inflation.
There's utility in that, right? So why don't we go to Elizabeth and you know, get her worldview on Bitcoin. I want to move on to the next topic. So.
Well, generally speaking, I think the bottom line is that Bitcoin, specifically crypto in general, is a decentralized application. So that means that though you could insert politics, you really have to try to keep politics out of this. I mean, there are all kinds of scenarios where we could talk about China's, you know, stopping or banning crypto mining and it going to, you know, basically the smaller countries that were once a part of Russia. They just moved their processes there. We can talk about, you know, El Salvador and what they've done for the people of their country. There are a lot of different political aspects that we could talk about, but this is really a decentralized application that can be used most specifically for third world countries who aren't as fortunate as we are in this country to have a banking system that is in place that is accessible to all of its people. So, you know, when I look at cryptocurrency in general, I say to myself, let's keep politics out of this completely. I mean, there's always a case scenario for why it won't work in this country or it will work in another, but the bigger picture needs to really stay in focus here, and that it's decentralized and it's for everyone.
I would just add to that pertains to Bitcoin specifically, not cryptocurrency. Cryptocurrencies are by and large not decentralized at the moment. None of the other names like Ethereum, Solana, these are not decentralized.
Yeah. We have a question in the audience. Brinkley?
Yes, for you. Are you looking forward to it being regulated?
I think it's going to help. I do think it's going to help. Now, you know, time will tell how regulated it will end up being, but, you know, right now it's the wild, wild west. And so I do feel like some degree of regulation, whatever that looks like, is going to be helpful. And I look forward to it.
Yeah, that's USA regulation, because I think
Exactly.
only 10% of Bitcoin is owned in the USA. So, Mauro, do you want to talk a little bit about regulatory environment in Europe?
Well, yeah, it's really moving forward now. I cannot. Clearly, I will speak about the European one because the Swiss one has already moved forward. It's already on the next stage. Europe is moving forward. European Supervisory Market Authority is releasing some new licenses, like the DLT license, like the one we have in Switzerland. In Italy, they have just, let's say, regulated everyone that is working with crypto, that is required to provide a specific KYC AML procedure. We have some broker dealer now that can work with security tokens that are regulated. The Italian market authority that I'm following quite a lot because I'm close to the border. As you said, we have the company in Zug, but I'm living in Lugano. So the Italian market authority is looking for regulating more and more and for being able of accepting and creating an environment for the crypto space. Like they would like, this is also at the European level, they would like, for example, to regulate a bit the white paper. So to provide like a structure of how a white paper should be written. And security token also are going to be defined better than what they are right now. So I think, I mean, from this point of view, I really believe everything is moving forward. And as I said, it's probably the first time that I am seeing some big group entering with except like a proof of concept of investment bank, but it's the first time that I really see big financial subject that are entering into the space with the digitization of financial contracts.
Perfect. So we have another question here in the audience. Ron?
Thank you. This is really for the entire panel. We're looking at a solution for lost and stolen, from a preventive point of view, where you can get some solutions so that if the asset is lost, digital asset is lost or stolen, you will be able to, when it's recovered, and access it a bit. And also for the stolen ones that are already recovered, be able to provide, essentially some level of documentation that is also self-digitized. Do you think, from your practitioner's point of view, if there's an insurance angle involved, is that additive?
Can we spend 30 seconds on this question, each person? So does insurance add value, insuring your crypto or your digital asset if it gets lost? I think insurance adds value in terms of the putting structure around it, but I actually think there's a couple of third parties out there who have some interesting solutions. Thoughts, Eric?
So the insurance products that, okay, so let's back up a second. Insurance with respect to cryptocurrency products pertains to when you're using a custodian of some kind, right? If you are taking self-custody of your digital assets, I've never seen an insurance policy of any kind that is going to protect you on your own self-custody. So when we talk about insurance, we're talking about using a third party custodian. So for example, if you're at Coinbase, they have an insurance policy. They happen to use a Lloyd's of London digital assets policy that covers the majority of the exchanges. If you're at Fidelity Digital Assets, Fidelity uses the same policy that covers their other $10 trillion. And if you comb through these policies, what you'll find is basically they only protect against willful misconduct on behalf of the custodian, and they don't really protect against much. So I've yet to see any material insurance policies in this space. That would be my 2 cents on it.
Okay, so Mauro, 30 seconds. Your thoughts on insuring crypto?
Yeah, no, I mean, I completely agree. Just want to add that yesterday I was speaking with an Italian bank, for example, and they would like to provide a kind of custodial service. So I think that at that point, they might be responsible if they take, when and if they will take cryptos, they will have to be responsible. I guess not just for misconduct, because if they wanted to be a bank and to operate like a bank, they will have to work in a contract like if it is a deposit. So they needed to give you back your crypto when you ask them to do it.
Liz?
I think we're really talking about two different issues here. One is what happens to your money if you invest, or what happens to your cryptocurrency, your Bitcoin, for example, if you invest in Coinbase, or it's on Kraken, or it's on a platform like that. The other angle is what happens if you have your Bitcoin stored in a cold wallet and you lose that wallet, or you lose your keys. And right now, there is no insurance application that I'm aware of that protects you from human error like that. I was just reading about a man here in the States that is offering to pay the county whatever they need to comb through a landfill because he has a wallet that got pitched accidentally, and he thinks it's got about $2 million worth of Bitcoin in it, and they will not let him do it. He said, whatever it costs, it doesn't matter. I want to do it. Please just let me do it. So it doesn't really, we really don't have a product out there right now that will hedge against human error, but that's a good idea, and you should do that.
That's really what I wanted to find out, because it's
Yes.
kind of like,
It
we're
doesn't
told that
currently-
it doesn't exist.
Yeah.
And as a, as a fintech guy who was not really crypto, I couldn't, I don't have the depth to be able to say so.
Yep.
So I want, it sounds like the panel agrees that if something is out there, you guys would be looking at it, or at least bigger
Right.
institutions will.
As far as I know, there isn't anything out there that protects from human error.
Call me.
So my only comment on lost crypto is that the Dread Pirate Robert is sitting in jail right now with a life sentence on hiring people to execute a murder they never did, right? And he's worth $6 billion, right? So of crypto, of Bitcoin, right? So I mean, he's sitting in jail, but I guess he's got a lot of money to appeal. So let's move away from Bitcoin and talk about Web 3.0, because I think it's very interesting, and that covers this whole NFT, metaverse, blah, 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 and to enable it. And to me, so I like to think about venture capital in a couple of ways. It's people kind of, venture capital, it's really gonna be great, it's like a great space, right? But I look at it, so we have downward spirals and upward spirals, right? And if it's an upward spiral, and I'm gonna give a couple definitions, it's probably something worthwhile to look at, right? It's like an upward spiral is the internet, something that's just gonna be massive, right? Upward spiral is like security, right? Every time somebody does something in internet security, somebody's gonna do something opposite to fight it. It's like spy versus spy, right? And to me, like crypto is an upward spiral because there's all these areas where it's always growing. And one of them is, this whole, it's a cycle, and it's spinning off things like Web 3.0, metaverse, et cetera. So can you just talk about that? I think Eric, you said, Eric, and I'd like you to take it off from here, because you said that when you started your fund in 2018, this stuff didn't even exist. But I get phone calls every day from guys who are like starting NFTs. There's like a pro sports league that's exporting Brazilian soccer players to Europe, and they want to start signing all these guys to NFTs. There's another application of NFTs in the marketplace of American university athletes who now have the ability to do branding. So they want to create NFTs and tokens around that to finance their branding. So can you talk about that, Eric?
Sure. You want me to talk about NFTs specifically and what the application there is? Or
I'm going to give you a minute.
Okay,
60
cool.
seconds.
So, all right, 60 seconds.
Talk about
So
everything you know.
I will, I'm going to focus on NFTs because it's the question I get the most from my LPs. So NFTs currently got embraced as this digital art form, right? And it's digital art. It took over Art Basel down here in Miami, and everybody's really interested in NFTs as art that you can display on your computer, your iPhone, your digital screen in your home. And prices have gone insane, and people are scratching their heads going, what's going on here? Somebody paid $70 million for this Beeple, blah, 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 right? And I think that that is a bubble. I think that bubble is unfortunately going to be burst and be fairly negative for the industry. That said, NFTs have tremendous application in a metaverse context. And let me explain what I mean by that. So in a metaverse world where people are increasingly spending more time at home on their computer in these virtual reality gamified worlds, right? Where in the real world, they may not have things the way they like them, but in this virtual world, they can create things more to their liking. And maybe they want to buy the new Nike sneakers in the virtual world. Maybe they want that Hermes bag, or they want this house or whatever, or the piece of art. And they will be able to buy those things in this metaverse world. And all the brands will be there to sell them these things. And In that virtual world, those are NFTs as well, just like in the real world. The only difference is if, say, Facebook, who's trying to be in this space, wins the platform. On the Facebook platform, if you purchase those NFT Nike sneakers and you want to wear them around Facebook's metaverse, they can assure that only the rightful owner of that NFT is able to display them. In the real world, whether you paid $70 million for that Beeple or I downloaded it free offline and I make it my screensaver on my computer, nobody can stop me from displaying it in the real world. If we go look in the blockchain and we look at the NFT, which really is just a certificate of ownership, in the blockchain, it will say there is one rightful owner and it's not the millions of people also displaying that. That's the difference between NFTs in the real world and NFTs in the metaverse, is the control that the platform has over who can really display them. So the folks we're invested with are not investing in any particular metaverse platform because it's too early. They're investing in the enabling technologies that are going to be rendering these things, et cetera.
Eric, that's really fascinating, but I just want to say the most ironic thing in the world is
Yeah.
Facebook protecting other people's intellectual property. Think about it.
Yeah,
Mauro?
I agree.
But I perfectly agreed, and that is very interesting because what I see right now, and we have received some requests about this from Italian fashion brands, high luxury fashion brands that are trying to create NFT for the metaverse. And I can tell you that it seems they are like getting crazy for this type of world that they want to create this NFT. And I think what you said make me reasoning because you can buy a fake T-shirt, you cannot buy a fake NFT, so it might also be used in somehow to prevent to do counterfeiting of fashion brands.
Sure. Elizabeth?
Well, if we're speaking about NFTs in general, the original use case was to support artists and the like, but there is so much available to us. As I see it, I look at it from a medical standpoint because that is my background. And I say to myself, how can we use this for security? How can we use it for personal health management, for the management of our health records? Basically obliterating HIPAA and all the strategies and laws that are behind that policy, and just bringing it all into an area where NFTs can be used to manage our health, essentially. And everyone in this room has a health history. And so there's not a human on the face of this planet that could not use an NFT in the healthcare space somewhere to manage all of their history and all of their medical records. So as we're talking about NFTs specifically, the use case for NFTs is just parabolic. And I'm really excited about this.
So a very interesting, remark, and more to know about this is that, and I lived in Switzerland for a little while, is that the Swiss are very privacy oriented and they're experts at anonymizing products. And so the reality is that healthcare is a product that needs to be anonymized. And so that kind of fits right into what Elizabeth's talking about, whether it comes to healthcare data or things like that. And the other reality is that so many applications of this approach for so many other things, where people want, I wear a watch, I know what my heart rate is right now, et cetera. And, I would love to share that information in an anonymous way with other people, right? Because it works, right? You have data that you never would have otherwise. So it's fascinating. It's a fascinating application. But again, can we talk a little bit about the pro sports embrace? So we just had Upland present to us in Silicon Valley. They raised 18 million on a $400 million valuation, and they have 2 million users and growing rapidly. They just signed an agreement with the NBA. And if you look, in the crypto world, in the metaverse world, in the NFT world, athletes are getting into it in such a big way. There's athletes who take all their pay in Bitcoin, et cetera. Can you guys talk around that some? And I think Mauro, you have a business that is one of your businesses that you're investing in is involved in that, and Eric and Elizabeth just join in.
Well, I'll go first on this one. Not only is it professional athletes, we're looking at college athletes with the change in the NIL deals and the way that they can now market themselves and their likenesses, all the way down to high school kids, which are also minting their own NFTs through NIL applications. It's really, since they changed the NIL situation, and also all the, like Tom Brady, for example, took his bonus last year in crypto. And I mean, all these guys are really interested in growing their portfolios in ways that we haven't seen before. And what they're doing is they're launching their own brand of NFTs. And there are numerous companies out there that are working not only in intertwining it with gaming, but also bringing the athletes, to the forefront of the NFT space. I mean, it's one of the fastest growing areas in the crypto sphere, as I like to call it, is, athletes and their NFTs.
It's remarkable.
Yeah.
Mauro, any thoughts?
Yeah, we have hockey team in the Swiss Major League for which we are preparing a project regarding NFT. It will be like a platform that later on can be implemented with other teams on the basis of the NBA shot and NFT. And yeah, I think it's particularly interesting because there are a lot of fun that are passionate about the team, about players, and I think it's a huge market now. On this one, I think Switzerland is a little bit behind what you have done in the US, that it's much more advanced, but I think it's starting, and this market will grow, also creating some investment opportunities, because when you enter at the beginning, I think that the curve will be the same one as you had in US with the NBA and other league.
Yeah, I
So-
personally, I thought that music was going to be huge, and like podcasts in the NFT space. But I was at Art Basel as well, Eric, and it was amazing how it just took over Art Basel, which
It did, yeah. So, first of all, for those that don't spend a lot of time in the crypto space, NFT stands for non-fungible token, and that means basically this is like an immutable certificate of ownership is really all an NFT is. And so, as we look at all these other applications that people are talking about here, the way I think about it is I try to bifurcate it, right? If the NBA wants to do something with content of the NBA, pictures of LeBron dunking or video or whatever, I think that that's pretty darn close to worthless, right? There's an infinite amount of content. There's no value to the content if it's potentially infinite. However, NFTs as kind of a membership card or an affinity program, or a way if Tom Brady wants to say, hey, I'm going to sell 100,000 NFT Tom Brady tokens, and those NFTs are going to allow you to come to a barbecue at my house or get tickets to this event or whatever it is, and that's your proof that this is the thing, then I think it has value. But as it starts to relate to just this endless amounts of content, calling it an NFT because it's a photograph or image of something, I think that's what everybody's hopping onto. That's what a lot of this is, and I don't ascribe any long-term value to that.